Artificial intelligence is no longer a futuristic buzzword. It is no longer confined to Silicon Valley, and it is certainly no longer just about ChatGPT. Today, AI is influencing everything from banking and healthcare to manufacturing, automobiles, cybersecurity, and enterprise software. According to industry estimates, global AI spending is expected to cross hundreds of billions of dollars over the next few years, and Indian technology companies are racing to capture a share of that opportunity. But here's the most important question for investors. If AI is the next major technology revolution, which Indian companies are actually positioned to benefit? Hi, this is Shrey and welcome to another episode of BizNES. Today, we are looking at some of the most important AI-linked stocks that Indian investors should keep on their radar in 2026. Now, before we begin, a disclaimer. These are not stock recommendations. This is not financial advice. These are companies that have significant exposure to the AI ecosystem and are worth tracking as the AI story continues to evolve. Let's start with perhaps the most obvious name, Persistent Systems. If there is one Indian technology company that has consistently been associated with the AI transformation story, it is Persistent Systems. Unlike traditional IT services firms that are still heavily dependent on legacy outsourcing contracts, Persistent has built a reputation around digital engineering, cloud transformation, and AI-led enterprise solutions. The company has aggressively positioned itself as an AI implementation partner for global businesses looking to integrate generative AI into their operations. Analysts frequently identify Persistent as one of India's purest AI execution plays. But what makes it particularly interesting is that investors are no longer viewing it as a conventional IT stock. They are increasingly viewing it as an AI growth company. And in a market where AI spending continues to rise globally, that distinction matters. The second stock on our list is Tata Elxsi. Now, Tata Elxsi is a very different AI story. While Persistent focuses on enterprise software and digital engineering, Tata Elxsi operates at the intersection of design, automotive technology, healthcare, and embedded systems. Think autonomous vehicles. Think intelligent mobility, think AI-powered medical technologies, think smart connected devices. The company's AI capabilities are deeply integrated into product development rather than simply software services. That makes Tata Elxsi one of the more important and unique AI plays in the Indian market. Despite facing pressure in some business segments over the past few years, many analysts continue to view Tata Elxsi as one of the most strategically positioned AI companies in India because of its exposure to future technologies rather than traditional IT outsourcing. The third company investors should watch closely is LTIMindtree. Now, this is where things become particularly interesting. Unlike many companies that are merely talking about AI, LTIMindtree has been publicly discussing measurable business outcomes from AI deployment. The company recently revealed that it generated more than $60 million in incremental revenue through AI-driven productivity improvements and the deployment of roughly 1,500 digital agents. Its Blueverse AI platform is also becoming a central part of its strategy to help enterprises develop artificial intelligence at scale. In simple terms, LTIMindtree is trying to become the company that helps businesses move from AI experimentation to AI implementation, and that transition could become extremely valuable over the next few years. The fourth name is Happiest Mind Technologies. Now, Happiest Minds is one of the most fascinating AI stories in India because it has been unusually transparent about its AI ambitions. Recently, the company reported nearly 80% year-on-year growth in quarterly profits, helped significantly by increased adoption of AI-led services. Even more importantly, the company has publicly stated that it expects generative AI to contribute a double-digit share of revenues within the next few years. That is a bold target, and if the company succeeds, it could emerge as one of India's most direct beneficiary of the AI boom. For investors, Happiest Minds represents a relatively smaller but potentially higher growth AI opportunity to larger AI giants. Now let's talk about the giants. TCS, Infosys, HCL Tech, Tech Mahindra. These companies are not pure AI plays, but ignoring them would be a mistake. The reason is scale. These companies already manage technology infrastructure for some of the world's largest corporations. As AI adoption accelerates, many of those clients will need implementation partners. And who is better positioned to provide that support than companies already embedded inside their systems? Recent market action suggests investors are becoming more optimistic about the ability of major IT firms to adapt to the AI era rather than become victims of it. Shares of Infosys, TCS, Tech Mahindra, and Persistent Systems recently rallied as confidence returned to the sector. Then there is another category that often gets ignored: the niche AI players. Companies like Apple India, Cient, Bosch India, and Oracle Financial Services Software. These firms may not receive as much media attention as the IT giants, but each has a unique AI angle. Apple is leveraging AI in digital advertising and consumer intelligence. Cient is using AI across engineering and industrial solutions. Bosch is integrating AI into mobility, automation, and manufacturing systems. Oracle Financial Services is applying AI to banking, fraud detection, and financial analytics. And that's an important lesson for the investors too. The AI opportunity isn't limited to software companies. AI is increasingly becoming an enabling technology across industries. Which brings us to the biggest question: how should investors think about AI stocks? The mistake many investors make is assuming that any company mentioning AI automatically becomes a great investment. But that's not how this works. The real winners are likely to be companies that can convert AI hype into actual revenue, actual contracts, actual profitability, and actual cash flow. In other words, investors should focus less on AI announcements and more on AI execution. Can the company demonstrate growing AI-related revenue? Can it win new AI-focused contracts? Can it improve margins through AI? Can it create products that consumers are willing to pay for? Because those are the metrics that matter. Because history teaches us that every technological revolution creates excitement, but only a handful of companies ultimately create lasting shareholder value. And as AI moves from experimentation to commercial adoption, the gap between the winners and the laggards is likely to become increasingly visible. So if you're tracking AI history in India in 2026, keep your eyes on Persistent Systems, Tata Elxsi, LTI Mindtree, Happiest Minds, TCS, Infosys, and a handful of niche specialists quietly building AI capability beneath the surface. Because the next phase of the AI revolution may not be about who talks the most about artificial intelligence, but it may be about who earns the most from it. And that is the story investors need to watch. With this, we conclude another episode of BizNES. And don't forget to follow News Asia for more such updates.